Okay, so my camera died on me. Sorry about that. Anyways, here's my entry. Here's my target. What did we do? We created a new low. Down we went again. Same concept. Boom, boom, boom. Here's your entry at 9.5. It ran up to 1.1. I mean, it literally went 20 ticks exactly and rolled over. So probably didn't get filled there, but again, a break even. Then price just comes down and blows through, rolls up, doesn't create a new Donchian, just kind of rolls down. And now we're probably going to go test the 5 minute red line. And we're getting later in the day. Yeah, here we go. We're sitting on the 5 minute red line, and then wham. That's a different trade that I really wasn't going to talk about at this early in the morning. But look at that. Wow. That's a wow. That is a wow. But anyways, so remember now, we didn't trade oil today because it was oil inventory day. But once oil inventory is over, and what normally happens, it doesn't happen at the inventory report, but it's usually sometime after, and I mean 30 minutes, 20 minutes, whatever, the market then actually reacts off of the oil inventory report. So, what I like to do, I didn't do it today because today is, I had things to do. But if I was sitting here and ready to trade, I would like to take oil, get past the 10:30 time frame, see if the market chooses a direction, and then see if we have some trades. Same mentality we did here. Okay? But we're going to do it at a different time because we're waiting for the news that impacts oil to happen, and then we're waiting for the market to make a decision. So let's go look at oil. All right. So let's go look at oil and see what happens. So we're going to go to 10:30. Right? Where's 10:30? Where is 10:30? Okay, here's 10:30. Now, so here's the news. All right, didn't really have much reaction, and we're still just kind of sitting here consolidating. My dogs are bothering me. Sorry about that. Anyway, so still just kind of consolidating, whatever. So we get past 10:30, we get past 11. See, we're still just kind of sitting here. We have not broken any of the Donchian channels in the last hour. See the Donchian channel here, Donchian channel there. Matter of fact, we reaffirmed the low right there. Then so boom, boom, boom. All of a sudden, the market decided at about 15 minutes after 11 that they were going to choose a direction now. Okay, and again, just like with gold, we're waiting for them to pick a direction so that we can then utilize the 1 minute gold line in the direction of that trade. Okay, what are you guys doing? Stop. Go, go, go. Sorry, the dogs. Anyways, so looks like we're picking a direction. Maybe. Oh, okay. Yep. Looks like we're going to go short. Now let's just pay attention here. We broke a Donchian channel, came up. We didn't quite pierce the 1 minute gold line. It's trailing behind. And let's see here. There we did it. 1, 2, 3, 4 candles pierced the 1 minute gold line. Okay. We have 1, 2, 3, 4 candles in a row where we have a higher low. We had a Donchian channel break here. Okay. We are at like 11:30. And we are definitely heading in the south direction. So let's see what happens. Oop, okay. This candle closed. It's higher than this candle. So our entry is at 84.18 when this one closes. Then this one closes even higher. So now we're at 84.19. Oh, look at that. Now, doesn't it? Now, here's the key. Here's the thing to pay attention to. See the reaction. That reaction is because the cells were lining up behind those candles from that pullback for the continuation in the direction the trade was going. Wow. Well, that's a reaction. Who wants $200 in less than 2 minutes? I'll raise my hand for that one. All right. But here's the low. We might actually be going there. Oh, and it went right there. Look at that. It went right there. And then once it went there, look what it did. Just like I was talking about in gold, and just like what happened in gold, it reversed back into, I mean, have you seen this movie before? We were doing it to the long side in gold. It went to the daily high, reversed back into the 1 minute gold line again, and then wham, off it went again. So we should be, here's the low, here's a higher low. Let's pay attention. When this candle closes, it pierced our entries down here at 84.04. All right, this candle, oh boy, this is an inside bar. This is kind of cool. All right, so now our entry is below this one, which is 84.06. Bam. Where does it go? Ooh, it's hanging out. Ooh, down goes Frazier. So between this one, which if you're in at 84.19, you should be playing for the low. You really, if the way it took off, you should have been grabbing your target and putting it to the low, which is 84 even. So there's 20 ticks. You got 20 ticks there. Boom, it came up. Here's your entry. 84.06. 20 ticks on that is 86. There's 86 right there. So there's $400, 2 trades, just like that, just by following those simple rules. Wait till the market picks a direction. Look for a healthy pullback, okay? Not shallow. And then wait for that candle to break in the direction that agrees with the direction of the market, the direction of your 5-minute red line, and then take your trade. Then, if you can't do that in the mornings and you happen to be sitting around your charts in the afternoon, you can look for the same sort of trades. They don't work exactly the same, but you can be looking for the same thing off that red line. Okay? So let's talk about that. Because in the afternoon, markets move a little slower, but those red lines become, like you can see the red line right here. It actually has a purpose. Roll over, pull back, boom, gone. Okay? But, so let's just look. God, boy, oil went down 82.50. He must have had more oil than they thought. I wish they had a lot more oil than they thought. Anyways, let's see here. Ooh, okay, here we go. We've hit the 5-minute red line. Notice, now this is after it crossed over. This is the first time we've hit that 5-minute red line, okay? And we're pushing down. We're way down now. Now we're way down for the day. I mean, the overnight open is 85.36. We are, at 82.80. We're quite a ways down. So let's see if when this candle closes, we can have a short below that candle, see what happens. Nope, we went up above it. Okay. All right, now, little philosophy I have, little theory I have, little whatever I have, and that is this. I don't counter trend off the 5-minute red line if we are a long ways away from the overnight open. Because regardless if it's to the short side or to the long side or whatever, because we have now established a direction in the market. So what I would be looking for is I would be looking for price to cross back over that 5-minute red line establish some sort of sign with the Donchian Channel or the daily low that we are looking to continue going short. Okay? If not, don't take any trades. It takes patience of a saint to trade the red line. just so you know. It does take patience. But you see a reason for entering, is my point. So let's just see here. So we did go down below, but again, we're just dragging. There's no commitment either way at this point. I mean, there's nothing here. Okay? Let me point something out. If I didn't get this out in my previous piece that got cut off, price will meet the moving average. Price will meet the moving average just by existing. The moving average will come to price. That doesn't mean there's a trade. You need to see violence away from the moving average and violence back to the moving average for there to be a proper reaction for a trade back away from the moving average. It's my opinion. So you need violence, okay? So let's talk about that. What are we doing? See, we're just meandering this line now. There's nothing there. So let's keep looking. Ooh, wow, now it started going long. Okay, now remember what we talked about longs. We are multiple dollars down from the overnight open. I'm not looking for longs, okay? We touched the top of the Donchian Channel, which is this pivot here, way back to the left. We just touched it right there. Look at that, okay? It's like there's so many things you can see if you just look at these charts. So we went back up to that pivot point, but we didn't break it. And we rolled back over. That's not by accident. Really, it's not. That's confirmation in my mind that we did not break that pivot and we rolled back down. That's putting in confirmation that we are staying south. All right? Because we did not break this pivot to the long side. But it doesn't matter. Let's just continue. All right. Well, I still ain't doing anything. Jesus, mother of God. All right. Wow. Oh, well. Look what we have here, Captain. Does anybody see violence now? Do you see the difference between non-violent and violent? Can you start recognizing the difference between violence and non-violence? This is why when I saw these big greens, I went, ooh, there's some violence. And then when I saw these big reds, I'm going, well, there's some violence there too, but I'm trading back against a downtrending market without any pivot confirmation breaks at all. That's not a good way to be a long-term trader. Now, then we went, rolled up, bam, that's some violence right there. So let's just see what happens. And then wham, created a new Donchian Channel low. Not that that really matters on the red line, but it helps to see that. It helps to see that the market's clearing out a direction again before it comes back to your line, waiting for your line to then continue the direction of that trade. So let's see what happens. Well, not much. Oh, okay. All right. So this candle closed. We would have our short here at 82.85. Okay. When that candle closes, short entry 82.85. Okay. Only based off the fact that we're continuing the direction of the trade. It's the first time after a violent crossover pullback. And we're looking for this thing to potentially enter here and then head back down to at least here, maybe here. We'll see. Next candle. Ooh, okay. So got a little lucky. This candle closed and the wick is still below this line. So now our entry, we move our entry up. Our entry is at 82.87. Oh, now we're in. I don't know if we went up and then down, or what we did, but we're in. Okay, here we go. Oh, yeah. Yeah, that's looking good. Oh, yeah. Yeah, that's looking good. Now, what did we say? 82, 87. Okay, so we're looking for at least like 67. Let's see if we get there. There's 75. There's 79, 78, 77, 74, 68, 72. Oh, you pain in the butt. Oh my God. It stopped one tick from that 20 tick target. Hold on here. Oh my God. This is painful. Come on. There it is. There's your 67. Oh, there it goes. Now it's going. I wonder if it goes to the low. I don't know if it does or not. Nope. Well, maybe. I don't know. But it went to the Donchian range, which is one of the things I've talked about. That's why you don't want shallow pullbacks, because when price starts going, one of the first places it's going to see resistance is the last place that pivoted it back. If you think about that, there was a reason it went from here back to there. There was buyers sitting here, pushing it back up into there. So when it comes back to that spot, you should expect a little hesitation, a little thought process, a little what's going on here. All right. But anyways, so that one worked out for 20 ticks too, if you played it out for 20, or if you played it to the bottom of that Donchian, 22, 20 something. Anyways, but that's the 5-minute red line. I wanted to just kind of throw that in to show that line actually has a purpose, but the time to really play it as a purpose is later in the day, when the trades are a little more meandering, and than the 1-minute gold line, where it's creating new areas and all that kind of stuff. So anyways, that's it. I hope that you take the things that I talked about here and really study them for yourself, because I'm telling you, free indicators, free everything, and the strategy works. You just got to be disciplined in the morning, take the proper trades, and you will get the money that you need to make it worthwhile to trade with Apex or Top Step or whoever you use. If you do use Apex, I have an affiliate code down below that you can use. It gives you the best discounts that they offer. I think Apex, hands down, is the best prop firm out there. Do all prop firms have problems? Yes. Okay. Does Apex have some problems sometimes? Yes, they do. But the main thing I can tell you about Apex is that anytime they've owed me money, they've paid me before they promised. And at the end of the day, I guess that's really what it's all about for me, is that when I do these trades and I make that money, they pay me. Okay? And that's what I want them to do for you. So I'll talk to you later. Bye.